Hello, it's April the 12th, come rain, snow or shine. I'm FX Blue and this is the Market Brief. So, who's bunking off work for an all-dayer in the pub today? There'll be a chilly one in the beer garden, that's for sure. Equally, if activating beast mode and really pushing some tin or sweating it out with the cardio queens is more your thing, today should have been marked in the diary for a while as the gyms are reopening this morning. And for the full house, the days of the COVID cut are behind us as the barber shops also get a nod. Happy days. But as we all take these small steps towards normality, it's decided to snow in Surrey in April. I mean, I've seen it all now. The real test of the roadmap will of course be between now and May the 19th, where the COVID data will be closely monitored as we do move out of lockdown. There will be an expected surge in economic activity, retail sales and consumer confidence as we all dash out to the shops and do our bit to contribute to a strong Q2, as the forecasts tell us. But there's something for us to look forward to there before the rise in unemployment, higher inflation and possibly even a delayed Brexit effect biting to dampen the mood towards the end of the year. For now though, in the market, sterling is in a bit of no man's land. It's a bit too cheap to sell and a bit too expensive to buy in right now. So it's being driven by the dollar. Last week we saw a high of 139.20. We kick off this morning from just under 137. We also lost a bit of ground against the euro. We opened there 115.25. So last week we saw the Fed try to reassure the markets that they do indeed have a plan to deal with the rising inflation. That's despite Powell's own best efforts to explain away the expected uptick as not actually inflation. That largely fell on deaf ears though. On the calendar this week we have retail sales. They're expected in at 9%, should reverse the 3% decline from February. But we also have inflation data. That's expected to rise about 1.6%, still comfortably below the Fed's 2% target. But anything more than that could be seen as too much too soon and could trigger a correction in the equity markets, which have seen a series of all-time highs recently. Euro dollar continues to be driven by the dollar dominance. We traded between 117.40 and 119.30 last week. We kick off this week freezing cold, just shy of 119. Right, that's it from me. A very well-earned cup of tea, maybe even a hot toddy when I get home. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.